Welcome back, folks. In this video, I want you to think about just stepping back and rather than trying to find an opportunity every single day, to wait for and be patient until you see a setup that is clear as day. So this here is a chart of gold on a 1 hour time frame. You're looking at the entire weekly range starting from Monday, which is right here. Okay, now in VIP, we tend to overtrade, right? Because students are learning. And so we engage with price almost every session, every day. But I try to encourage students to take a step back and just wait and be patient until a very clear setup can be identified. And I want you to look at this chart and think about where is there a setup in any direction on this chart where it's absolutely clear if you know what you're looking for, okay? I'm going to point it out to you now. And I want you to look at this particular day here. This is Thursday. Now, what do we see here on Thursday? The first thing we see is that the market here on Wednesday, which is right there, has had a change in direction. So we were going down, right? The trend was down in the early part of the week, okay? And then we shifted, right? There was a shift in market structure. How do we identify a shift in market structure? Well, as you know, my favorite setup is the breaker, either a bearish breaker or a bullish breaker. Okay, so here on Wednesday, we have a low, okay? We have a high, then we have a lower low, right? And then we have a higher high. So that is a shift in market structure, okay? When we traded above this swing high, that established a change in the market structure, a shift in market structure, okay? Because we now have a higher high, right? This swing is important because it created this low. And when we displace through that low, there is a shift in market structure. Okay, so hopefully you can understand that. Displacement means that there was a gap, right? We can see that we formed this gap on the way up. Now, this is an hourly time frame, which is an important time frame, right? It's a high time frame. So when you're looking at higher time frames, 30 minutes and above, then it's a lot easier to identify these opportunities and they are a lot cleaner and higher probability. So where is our breaker? Our breaker is going to be this up candle, right, in that swing. So what that means is any pullback into that zone is an opportunity to accumulate. Now, what makes this setup even higher probability on this day on Thursday? Well, what do you see here? There's a couple of things. We have lots of confluence. Number one, we have these equal highs, right? Okay, when you're looking at the market down here on Thursday, you can see very clean equal highs that will be the draw on liquidity, right, on the way up. And we also have the current weekly high. That's what makes this setup such high probability, and in my view, the easy setup, okay, because we have lots of elements, right, what we can call confluence, and a very clear draw on liquidity. We have two liquidity pools. So when we're looking at the market on Thursday, we see a bullish fair value gap, the market's having a pullback down into that bullish fair value gap, into these two down candles, right, this down candle and this down candle, which is our bullish order block. Why is that a bullish order block? Because those two down candles have taken liquidity, okay, right? This movement down has taken that low, okay? So there's been liquidity taken by those two down candles. That's why that forms our bullish order block, okay? And we've had displacement above the bullish order block and the bullish breaker, okay? So not only have we had a shift in market structure, but we have had it with displacement, which is important on a 1 hour time frame. So we have, let me repeat, bullish fair value gap, bullish order block, bullish breaker on this move down. Okay, that's important, right? And we have very clear draw on liquidity, which is very important. The market needs liquidity. We have two liquidity pools in the form of a daily high, okay, and a weekly high. So that is the easy setup, okay? You've got to identify your easy setups. You don't need to be trading every single day or every single session. One trade a week, that's 9 out of 10, such as this setup here, that you can scale into is all you need. You just got to be patient. Okay, so go back, study the chart, and identify high probability setups. You will always find at least one high probability setup that I call a 9-star setup on any pair, right? You just got to go and if you have a basket of pairs that you trade, Forex or indices or commodities or crypto, you just need to navigate through your charts and look for a 9-star setup that you can trade that's very clear as day, and scale into, rather than trying to catch little movements up and down on individual days or through individual sessions. This is one single trade, right? High probability where we can capture on this particular market over 300 pips, right? From that entry to at least this weekly high is 260 pips with a bit of a buffer, right? Because the market usually pushes up through a high. Easy, simple, very clear. Has all the elements that you need. You have a setup that has confluence in the form of a bullish fair value gap, bullish order block, bullish breaker. Okay, clear draw and liquidity that are higher time frame liquidity pools such as a daily high, weekly high. Okay, in a market that has now had a shift in market structure. Okay, hope the video is useful. I will now talk with you in a future video.